Welcome back everyone to the Audacious Money Witch channel where we talk about the magic behind the stock market. All right, listen up. The Trade Desk just got that official invite to the S&P 500. They're joining the club on July 18th. That's a huge flex, making them one of the only 6 companies to make the cut so far in 2025. Since their IPO back in late 2016, TTD has been absolutely crushing the market, pulling in gains of 2,410%, while the S&P 500 was just chilling with a mere 190%. These stock gains aren't just hype either. Their revenue has gone wild, soaring over 1,900%, and net income jumped over 500%. Even with this stock doing numbers and their legendary growth streak, I'm telling you, TTD's best days are still ahead. If you've been rocking with me for the past year, you're probably sitting pretty on your TTD stock right now, up over 50% already. But let's dive into why this stock is still a major buy today, even if it's looking a little bougie on the valuation front, and why joining the S&P 500 is bigger than you think. Why the S&P 500 is a huge flex. The S&P 500 is basically the GOAT index for the US stock market, featuring the top 500 public companies. It's the ultimate vibe check for how the whole market is doing. To even get considered for this elite squad, a company has to be US-based, duh. Have a market cap of at least $20.5 billion, that's bank fam. Super liquid, easy to trade, at least half their shares gotta be available for trading. Profitable, gap, in the latest quarter and over the last 4 quarters combined. Making this list, that speaks volumes about the Trade Desk world-class management team. No cap. There's a whole new era popping off in advertising, and TTD is basically leading the charge. CEO Jeff Green built the biggest independent platform for ad buyers. This dude founded the first online ad exchange back in 2003, then took what he learned to revolutionize programmatic advertising by co-founding TTD in 2009. Main character energy. TTD's secret sauce, innovation and objectivity. They're not out here competing with big ad agencies, they're partnering with them. That's a different kind of flex. And TTD has a long history of dropping innovative tech. Their unified ID, UID, that's the industry standard, basically the hair to cookies. Those annoying bits of code that track you online, UID uses encrypted consumer data to target ads and measure success, keeping advertisers winning without messing with your data security, period. Recently, TTD dropped Kokai, their state-of-the-art platform that brings the full power of AI to digital marketing. Kokai can peep 13 million ad impressions every single second, making sure advertisers hit the right audience with the perfect ad at the ideal time. It's giving precision. The Q4 oopsie and the comeback. Full disclosure, TTD had a rare L in Q4 last year, missing their own guidance for the first time in 33 quarters. That was because they were transitioning customers to Kokai. But since then, they've done an amazing job quickly righting the ship and re-accelerating their growth. For real, their recent Q1 numbers were fire. Revenue hit $616 million, up 25% year over year, and adjusted EPS popped 27% to 10 cents. Addressing the FUD, why was the stock stuck? So why was the stock chilling around $70 for so long? Wells Fargo recently downgraded it, stressing about Amazon DSP becoming a bigger threat after teaming up with Roku for streaming ads. Here's the context. Yeah, Amazon and Roku are trying to let advertisers reach people precisely across streaming apps, but TTD's Kokai platform is gaining serious traction because it's way more objective. Plus, their open path innovations make the ad ecosystem more transparent for everyone. Plus, TTD has so much white space, aka untouched markets, to conquer in audio, retail, and international markets. This sets them up for high teen to low 20s revenue growth in the next few years. On the flip side, Some are worried Amazon's integration with Roku might start snatching ad dollars from non-Amazon CTV inventory. But honestly, I'm siding with Evercore here. Google's DV360 is probably the one that's going to lose more market shares. Financial health check. Solid as a rock. The Trade Desk has been consistently profitable since 2013 and has a rock-solid balance sheet with over $1.74 billion in cash and no debt. That's the kind of stability we love to see. Giving advertisers an alternative to those walled gardens like Meta and Google is TTD's whole vibe. It's helped them keep that growth streak going and earned them that S&P 500 spot. CMOs are now more focused on getting the most bang for their buck, so ad spend is shifting from those legacy Meta Google platforms to programmatic, data-driven advertising. Why Wall Street is back to being bullish. Even with TTD's rare Q4 misstep, Wall Street is back to being bullish.
It's TTD and it's Trade Desk. So what caught your eye here?
So I think if you look at the last 10 years of digital ad spend, it's been dominated basically by Meta and Alphabet. So YouTube, Google, Instagram, and that makes a lot of sense because those platforms know more about the viewer or user than any other form of advertising you could conceive of, whether it's television, radio, billboards, magazine pages, etc. What's happening now is that ad sales are increasingly leaving those walled gardens and going to places like connected television now that the TV isn't so dumb anymore. The television now knows as much about the person watching it as the computer and the mobile phone. The Trade Desk sits right in the middle of this huge secular trend. This is a stock that's been on my radar for a long time. It just made it onto the list of the best stocks in the market after having an incredible earnings report last time they reported. This is basically the company that acts as a two-way marketplace / brokerage for anyone who wants to programmatically put their advertisements onto television and do so in a way that's efficient and tech-centric and get a lot of feedback about who watched it, what actions they took, etc. So the way I think about the Trade Desk is they have basically built this platform outside of the walled gardens of Meta and Alphabet, and advertisers are increasingly choosing to programmatically buy ads on this platform. They're using AI. It's very cutting edge stuff. It's not like, regular TV ads. They're being very smart about who they're displaying what to, what actions they want to see taken, etc. Netflix is utilizing the Trade Desk and a lot of other video platforms. So
you sold it.
Yeah, I mean, this is a company that came in, missed on revenue, earnings per share as well, and the guidance. Here's the problem. You're buying a momentum name, and you've got a huge rally in the stock, so everyone's already up in the name. And then they come in, and they have nothing positive to say. There's no valuation support. It was already a nosebleed high momentum name with a crazy valuation.
Okay, so you're Netflix, and you've got this advertising tier. Well, you've got inventory, but you don't know anything about that. You're a company that makes Hitman, okay? I won't give away. And what bothers me is that people don't realize that you give it to Trade Desk. That's why it's at 45. Look at this thing. This thing is just a juggernaut. Now, David, here's something, because I know you care about cable a lot. Streaming is now 38% of TV share. When it gets to be 110%, what happens to you? And Netflix announces new partnership with Trade Desk. NBC Universal partners with Trade Desk for the Paris Games. Disney Plus, Trade Desk. Roku. Oh, Jonathan Cannon, where you listen to this, all these people are not going with Google.
Right.
But this is just win, 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 win. Okay, and remember, this is the fastest growing part of all advertising in the world.
Susquehanna analysts are super hyped, keeping a buy rating and a $135 price target on the stock, which is a potential 79% gain for investors. They're pointing to TTD's spectacular growth track record and near flawless execution. Believing those past issues are totally resolved, TTD is currently trading at 34 times next year's earnings and 11 times next year's sales. Yeah, it's a bit bougie. But honestly, for a company with this kind of growth history, it's a fair price. Plus, normal valuation metrics kind of struggle with high growth companies. When you use the PEG ratio, price to earnings to growth, TTD clocks in at 0.87. Anything under 1 is considered undervalued. So yeah, it's a steal. Given their long track record of success, their tech advantage, and Wall Street's renewed love, I'm saying the Trade Desk is a strong buy.
What has happened in the last few years, especially because so many of the consumers have moved into streaming, is that advertisers have more choices. And so as user-generated content has more problems, more hate speech, more problems.
You just don't know what's going to happen.
Yeah, you don't know what's going to happen, and people can say anything, and it's generated by users, and policing that is hard, and there's more and more users. That more and more of the dollars have moved to premium content, where the real value is. And CTV, or connected television, is really the most effective advertising in the world right now, coupled with audio, and there's more choices than there's ever been. So they're often moving from those platforms into that.
That Google is the king of advertising, both getting ads but also rating ads. How can you, a little company, Jeff, take Google on? Because that's what you're really doing.
Yeah, so we are taking on Google. I wouldn't call them the king. I think that's still, I think the throne is still up for grabs.
Okay.
But the reason why they've done so well is because they've monetized Google.com and YouTube.com really well. We think that advertising is less about navigation like Google.com and more about winning hearts and minds across a very competitive media landscape, which has hundreds, thousands of different properties, websites, apps in it. And so we just want to make certain that we're objectively deciding which ads an advertiser should use. And our objectivity is something that Google doesn't have.
Congratulations to everyone who got in TTD with me.